Welcome back to AlgoBot, your channel for clear, hands-on breakdowns of automated trading systems for MetaTrader 5. I'm your host here at AlgoBot, and in today's session we're taking a close, educational look at an expert advisor called Corrective Leg Reclaim. This is a trend continuation strategy built around market structure, using impulse legs, corrective pullbacks, and a moving average trend filter. By the end of this video, you'll understand how it reads a trend, how it waits for a pullback to fail, and how it manages its stop loss and take profit. Everything here is for education only and not financial advice. Let's get started. Corrective Leg Reclaim is an expert advisor for MetaTrader 5 that focuses on trend continuation. Rather than trying to predict tops and bottoms, it aims to join an existing trend after a brief pause, using the structure of the price action itself. The core idea comes from how trends tend to move. In a healthy trend, price advances in strong impulse legs, and between those legs it drifts back in smaller countertrend moves known as corrective legs. The strategy watches for one of those corrective pullbacks to fail and treats that failure as a sign that the dominant trend is resuming. Three tools work together here. First, an exponential moving average, with a default period of 50, acts as the trend filter. The strategy only considers long setups when price is above a rising average, and short setups when price is below a falling average. Second, fractal swing pivots mark the turning points of each leg. A swing high marks the top of an impulse move up, and a swing low marks the bottom of an impulse move down. Third, the average true range, with a default period of 14, measures recent volatility and helps size the protective stop. Because every calculation runs on a single time frame, the one your chart is set to, this approach can be studied on many symbols and many time frames. It is designed to be selective rather than constant, waiting for a specific structural event before doing anything at all. This style may appeal to traders who prefer a rules-based, structure-driven approach, and who are comfortable letting many bars pass without a trade. As always, this is an educational walkthrough of how the code behaves, not a recommendation and not financial advice. Trading carries risk, and losing trades are a normal part of any strategy. Let's walk through the mechanics step by step. Everything begins with the trend filter. On each newly closed bar, the strategy reads the exponential moving average and compares the closing price to it. For a long setup, the close must be above the average, and the average must be sloping upward, meaning its current value is higher than its value on the previous bar. For a short setup, the close must be below the average, and the average must be sloping downward. If neither condition holds, the strategy stands aside. Next, the strategy identifies swing pivots using a fractal method. With the default SwingLookback of 3, a candidate bar is checked against the 3 bars on each side of it. If that bar's high is the highest in the group, it is confirmed as a swing high, marking the end of an upward impulse leg. If its low is the lowest, it is a swing low, marking the end of a downward impulse leg. The most recent confirmed pivot is stored and armed, ready to be tested. Now the entry itself. For a long, the strategy watches the bars that follow the swing high, and these form the corrective leg down. The signal appears when the previous bar closed at or below the stored swing high, and the newest closed bar closes above it. That reclaim means the pullback has failed and the uptrend is resuming, so the strategy opens a buy. The short side mirrors this exactly. After a swing low and an upward corrective bounce, the signal appears when the newest bar closes below the stored swing low, and the strategy opens a sell. Only one position per magic number is allowed at a time, and each pivot is consumed once it is used, so a single swing can never generate more than one trade. Risk management is built into every entry. The stop loss is placed at the further of 2 points, the structural extreme of the pullback, padded by a fraction of the average true range, or a fixed ATR multiple away from entry, which defaults to 1.5. Taking the further of the 2 keeps the stop beneath genuine structure, while never sitting inside the market's normal noise. The take profit is then set as a fixed multiple of that stop distance, using the reward-to-risk ratio, which defaults to 2. So if the stop is a certain distance away, the target is projected twice as far in the direction of the trade. Because the position already carries a stop and a target when it opens, the trade manages itself from there. Let's read the actual MQL5 code that runs inside MetaEditor. At the top are the input parameters you can adjust in the strategy tester. TrendEmaPeriod, defaulting to 50, sets the moving average used for the trend filter. SwingLookback, defaulting to 3, is the fractal half-width, the number of bars checked on each side of a pivot. ATR period controls the average true range. ATR stop multiple scales the volatility floor for the stop. Reward ratio sets the take-profit multiple, and lots and magic define the fixed trade size and the identifier for this strategy's positions. Now the long block. The condition reads, if the trend is up, if we have an armed swing high, if the previous close was at or below that swing high, and the current close is above it. When all four are true, the corrective leg has been reclaimed. The code reads the ask price as the entry, then sets the stop loss to the lower of the pullback low minus a small buffer, or an ATR multiple below entry. It measures the risk, projects the take profit at that risk times the reward ratio, and calls trade.buy with the lot size, stop, and target. The pivot is then cleared so it cannot be used again. The short block is a mirror image. If the trend is down, a swing low is armed, the previous close was at or above it, and the current close is below it, the strategy places a sell. The stop loss becomes the higher of the pullback high plus the buffer, or an ATR multiple above entry, and the take profit sits at the reward multiple below entry through trade.sell. Both sides share the same structure and the same disciplined risk model. Let's bring the logic to life on a chart. What you're seeing is an illustrative heuristic example. The blue line running through the candles is the 50-period exponential moving average, our trend filter, and I've drawn two horizontal reference levels that the strategy cares about, a prior swing high at 1.0872, and later a prior swing low at 1.0856. We begin on the left in a clear uptrend. The first few candles push higher, one after another, and notice how they all sit above the blue moving average, while that average slopes gently upward. That combination, price above a rising average, is exactly the condition the strategy needs before it will even look for a long entry. As the impulse leg matures, price prints a peak. This is our fractal swing high, and it lines up with the drawn level at 1.0872. A fractal pivot is only confirmed once several bars on each side have made lower highs, so the strategy waits patiently for that shape to complete before arming the level. Now the correction arrives. The next two candles pull back, making lower highs and dipping toward the moving average. This is the corrective leg, the short counter-trend breather inside the larger uptrend. Many traders would feel nervous here, wondering if the trend is over. The strategy simply watches the swing high level and waits. Then comes the key candle. Price turns back up and closes decisively above the prior swing high at 1.0872, while the bar before it had closed below that level. That is the reclaim. The corrective leg has failed, the pullback is broken, and the buy entry marker appears. Because the trend filter still agrees, with price above a rising average, the strategy signals along. Look at where the protective stop sits, just below the low of that pullback, cushioned by a fraction of the average true range. The stop is placed at whichever is further, the structural low or a set ATR distance, so it rests beneath real structure rather than inside the noise. From there, the take profit is projected at twice the risk, using the default reward-to-risk ratio of 2:1. Price now resumes its climb. The following candles carry higher, and the move reaches the take profit target, closing the long trade in this illustration. After that peak, momentum shifts. Price rolls over. The candles begin closing below the moving average, and the blue line itself starts to slope down. The market has flipped into a downtrend, and now the strategy only looks for short setups. An impulse leg pushes lower and carves out a fresh low. This is our fractal swing low, marked by the drawn level at 1.0856. It is confirmed once the bars on each side hold higher lows around it. Then price bounces. A couple of candles drift back up, forming the corrective leg of the downtrend, this time an upward breather. Again, the strategy waits, holding the swing low level in memory. The decisive candle then breaks lower, closing below the prior swing low at 1.0856, while the previous bar closed above it. The corrective bounce has failed, and the sell entry marker appears. With price below a falling average, the trend filter confirms, and the strategy signals a short. The stop for the short sits just above the high of that bounce, again padded by a fraction of the average true range, and the take profit is projected at twice that risk below the entry. Price then continues lower and reaches the short take profit target, completing the second trade. Notice the symmetry. The same structural event, a broken corrective leg in the direction of the trend, drives both the long and the short. That brings us to the end of our walkthrough of the Corrective Leg Reclaim Expert Advisor. Today we covered the big picture, a trend continuation approach built on a moving average filter, fractal swing pivots, and an ATR-based stop. We stepped through the exact long and short conditions, read the core MQL5 code together, and watched both trades unfold on an illustrative chart. Remember that everything in this video is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy experiences losing trades, and results vary with market conditions. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.